Hey everyone, welcome to today's weekly update on the electric vehicle market and the weekly insurance registration numbers. As you can see on the longest of the, let's say, insurance the trends, we can see here at the end of this side with the usual blue numbers representing Tesla, the green ones LiAuto, Nio in white, and Xpeng in yellow. And over the past 2 weeks, Xpeng has actually been performing better than Nio, especially as the monetary has kind of ramped up. But this week specifically, Nio is now back at above Xpeng again. We can see that they are very close, but it's good to see that Nio has 2 straight weeks of close to 5,500 deliveries a week. I quite like that. We can also see that according to the numbers that we have, it's difficult to say how realistic these Onvo numbers are, but these are the numbers being reported coming from China and different Twitter accounts. We can see that the Onvo ramp is for real, so now we are up to 1,300 deliveries this last week, which would be, as I mentioned according to my last video, I would expect maybe Onvo deliver around 6 to 6,500 deliveries in November. As they mentioned from the Nio management, the target for October was 5,000. They came in at 4,319. And the target for December, not November, for December, so after 2 months of ramp, they go from 5,000 to 10,000, which means that I would expect the company to deliver maybe in November around, I don't know, 7,500 maybe. And I would say let's meet in the between, even a bit slower, and let's say, I don't know, 6,500, in best case scenario 7,000. But in my opinion, these numbers are actually, for Nio they are solid. The problem for me, and this is why I'm a bit, disappointed, and I think this is why market prices in Xpeng in this, higher up than Nio currently. You can see that they finally have 1 billion or so more additional market cap, which is not to be sneezed about. Yeah, these low market caps is probably 10-12% or so higher than Nio, despite Nio having substantially higher deliveries. In fact, if we go to let's say year-to-date deliveries for Nio and Xpeng, you can see that Nio sits currently at 170,000 or so for 2024 and Xpeng at 122,000. And this is including with Nio having the higher margins. Remember, Nio actually has the much higher vehicle sales margins. The problem for Nio has always been the battery swap stations, and this is why I'm kind of, as of late, I'm starting to transition a little bit to Xpeng. It's not because I don't believe in Nio's company as a future. In fact, my larger position is still in Nio. But what I'm thinking is that I'm for sure 100% sure that the company will do well in the future. The problem for me is that the management is kind of not seeing the value of creating value for the investors. And I think, in my opinion, you don't need this, huge, aggressive infrastructure build out that is very cost intensive. Why not, reduce on that a little bit? I don't know, let's say 20 to 50%, in order to have much higher margins and get to break even much closer, increase your market cap much higher, maybe to 20, 30, 40 billion, much more, sooner than otherwise would be possible. And in that scenario, if the company decides to do another dilution of even 10%, that's 4 billion or so in more capital for the company. But if they continue on this path, I don't think they necessarily need to do another kind of capital raise. But I think it's very possible. I think it's actually, I would say right now it's a toss up of 50-50. So it's not like, it's not like a company makes a waits for the last single dime on the balance sheet and then, makes a capital raise. No, they start to look at the cash position, and as the cash position goes to, I don't know, let's say less than 3 billion, I think they start to get nervous. And sure, we are right now at Q2, which was 5.7 billion or so, and maybe close to 5 billion by end of Q3, which was recently. But we are getting, below 5 billion already. Again, I do, in my very conservative models that you can see here. Let's zoom in a little bit. Actually, I got a comment on my previous video that the numbers are not visible. I have to find a better way to look at these numbers than just a Excel chart, despite, you know, some colors as well. But if we go, let's say, let's see here. So here we have Q3 of 2024. So our expected, you know, upcoming earnings, and you can see there that the most important line for me here is the net income or net loss. And look at this. So the deliveries increased by almost 8% quarter over quarter on back of a quarter over quarter of 90% or so. But look at this, like, you know, the quarter over quarter change in net loss goes from 3% reduction, just above 3%, to just below 3%. So I think, you know, it is a bit of disappointing, because the company has potential. I mean, they are selling at a fairly high average sell price. The company's vehicle delivery is also getting solid to maybe, you know, probably close to 70 or 80,000 deliveries already in Q4. So why are not we seeing any substantial improvement? I mean, in my model, I have average sales price actually around 38,000 in Q3 and 37,000 in Q4. And remember, these are the average sales price on the Chinese market, essentially, because well above 95% of Nios sales are in China, which means this is highly premium products in China. If this was a price in Europe or US, maybe this would be, you know, mid-range, but in China these are, you know, premium cars. So the question is, do I believe that Xpeng will return more, let's say, shareholder value to me than Nio at this current stage? Sadly, I think that's the case. It doesn't mean that I'm gonna sell out on my Nio position. I will definitely hold it, but I think I have to be honest, like, I'm getting a little bit tired of the management that, although they are executing well on the, you know, everything, it's just, why do you need so many models? Why do you need so insanely, like, why do they have close to 10 or so amount of different models when other companies don't need as much and they sell enough? Sure, it's most of the classical Neo brand is, you know, in the higher price segment, so you should not expect as much as you know, sales per single model. But still, I think it's not the most wise use of the company's money. And remember, like, the valuation is so low now, so they need to make break even now. They need to start to make some money and at least start to lose some money. Who expects that? Like, how much more money can they raise? And if they raise 3 billion, imagine the dilution to the stock. I mean, they will destroy the current stock shareholders. Whereas Xpeng, I will start to do some very detailed Excel sheet again for Xpeng as soon as I get the time for it. But I do believe they are at the current stage. I do honestly think that Xpeng is closer to that kind of future, and I think that's what we are seeing in the market. And we have to be honest, you know, let's not get married to the stock. I mean, the CEO Li Bin, he has to earn the trust of the investors, and although they're still executing fairly okay, I think it's highly irresponsible to do it the way they are doing it, like increasing the infrastructure build out so fast. And why? I mean, do you see them getting utilized? No. If not, why then? Why the urgent need of expanding? Like, look at this. If you go to August, they had around 2,000, just below 2,500 stations, and we were projected to go to well over 30 by end of the year, maybe close to 40 almost. And then suddenly they start to expand. So all of a sudden, you know, in just 2 months, they added close to 200 different, so essentially 100 swap stations a month or so. And there's no need for that. Let's wait. Let's get the utilization going up, and then start to get some money. Yeah, so it's a little bit frustrating. But then the traditional look at the lithium carbonate price still stuck at these low levels. So I genuinely do expect Nios margin to be better into the next quarter. So these are the expected margins for quarter 3 2024. You can see that my gross margin modeling is close to 11%. So essentially 1% point up from the 9.7 in Q2. And that's, you know, that's a 11% improvement quarter over quarter. So that's nothing to be sneezed about. And then we have the vehicle margin, which is again for Nio in this scenario is higher than the gross margin of the entire company. And the reason why that's the case, why the vehicle margin is actually fairly good at 13, so expected 13% or so, rather than the 10.8 for the entire company, is again the infrastructure cost. And I don't care, to be honest. Like, I know that we all talk about, oh, about the future, maybe the swap stations, but honestly, I think as time goes on, although swap stations are always offering some sort of services that they cannot be replaced with the traditional, the likes of the Teslas or all the other cars that don't offer the swap solution. But I do think for one of the best things about the swap station is the access to fast, very quick, reliable battery top up. And as time goes on, and as the charge rate of the other competitors goes up as well, the batteries charge up just faster. So one of the advantages of the battery swap stations will kind of decrease as time goes on. I know that there are tons of different advantages as well, so let's not forget that. But I think they kind of, honestly, I think the management dropped the ball. How can they allow Xpeng, for example, perform so much better than Nio, despite them having lesser, fewer cars, lesser margin per sold car, and then in addition to that, they are just, I think quality-wise not on the same level at Nio. And despite all of this, you will probably, as some of the critics are right, start to see Nio looking at another capital raise, and that's what I'm scared for. Like, if we look at my numbers, sure, everything looks good. They will turn the ship around, and they will soon have a gross profit. If you look at the net loss, I think, as I said previously, let's see when this number here on this line 30, when will that go from a negative to a positive according to my model. So it's in essentially 2.5 years from now. But again, the issue is, do you think that the company won't raise if they have 1 billion or so on cash? Of course they will raise before that. Now you could argue that my numbers are very, very conservative. Sure, that could be true. But then again, let's go back to the last quarter, because that actually makes the point a lot. Look at the vehicle delivery increase. They increased the vehicle delivery from 30,000 to 57,000. That's a 91% increase quarter over quarter. And with 91 increased vehicle delivery quarter over quarter, they gave us a net loss decrease by 3%. That's that's not telling a good story. I don't think any one of you would hurt if you look at Xpeng a little bit right now. They're doing actually great. I think Xpeng, if they do this monetary continue to ramp up, I think their Q3 numbers will gonna be really, really great and surprise most people. This stock could easily go to $20 or so if the Q3 numbers are great. And again, I'm not giving hope on Nio. I'm just thinking maybe we should actually, all of us collectively, because you're in it not to marry to the company, you're in it to make money, right? I think we should at least to some degree diversify from Nio to Xpeng, and let's see what happens. So please, thank you for your great comments in the previous video. I really, really appreciate it. And please like and subscribe, and see you in the next one.